Good afternoon. This is Brad Dennis with BIS Commodities with your weekly market wrap-up. This is for the first week of April. Looking at the grains, we've seen a little bit of a range. We know that the July corn wants to trade $3.80 to $4, and we saw that full range this week. Supply and demand reports will come out on Tuesday. And what we want to do is we want to watch that demand, make sure that the demand is still solid. Now, the other thing to watch out too is how the USDA reduces overall corn for a world basis. Due to the issues down in Argentina, we could see those numbers coming down, and that's what the trade really wants to grasp. Also, a lot of people are buying off of that 380 basis, the July corn, just because we do have a growing season and things are not warming up as they typically do by this time. As for the beans, we've seen the best range in beans on a weekly basis since 2016. We are lower for the week, but that's due to possible tariffs coming in on our beans out of China. It seems that when the tariffs were announced, it was at night, I believe around 2:40 in the morning. The computers read the headline. They sold off beans. Everybody came in and bought beans because they knew that you're not doing anything with demand on the bean side of things. There's still world demand for beans, and that hasn't gone down that much. Now, right now, we're looking at also China knowing that if these tariffs do go into effect, it's not going to be for a couple months. So there's a little bit of a buying spree ahead of those tariffs as well. Things to watch out for down the road: meal sales. Meal sales this week were very good. If they continue to run high, then that theory of poor Argentine beans are going to bring more meal sales to the U.S. That could come true if we continue to see meal sales like we did this week. Also, watch bean sales, see who's buying it up. Eventually, you're probably not going to see as much China, but if those other countries that typically go to Brazil are coming to the U.S., because we are cheaper still, then we might be able to keep demand at a somewhat steady pace. Now, we're not going to increase demand, and I don't think that demand is going to stay at 100% of what we had, but it's not going to taper off all that much. So beans on Wednesday, they went down to that 980 level basis. The maize, we've popped right back up. So you look at that 980 level in beans, you look at that 380 level in corn basis the July, and those are going to be pretty good support areas. Out of this whole thing, the best performance came from wheat. And wheat is still watching the weather in the southwestern plains. It's been dry, it's been windy, things don't look good. We're going to get another national wheat rating on Monday. That's not going to be very ideal. So wheat is in a weather market, and that could continue to pull the corn to the upside. Livestock. Basically, last week we saw the end of the month and a quarter. Funds were long a substantial amount of cattle. I think about 3 weeks ago they were long about 100,000. Now they're down to being long just 36,000 as of the Commitment of Traders report today. So they dumped out of a lot of their long positions. Come into this week, we're seeing a little bit of a dead cat bounce or a little bit of a bounce back up. April will be first notice day on Monday. Cash is trading at about 117 this week. They're looking for steady trade next week, so you might see those Aprils perk back up there. Might pull up June's a little bit, but the overall thought pattern is that the board led boxes lower. Boxes are now going to lead cash lower. So not very optimistic about higher prices in the after the April contract goes off. We've still got a lot of cattle to get through. Now, the cattle on feed report in April might be positive for those December or fourth quarter months, But for the summer months, the June, August, we'd be taking advantage of any kind of rally up to that 110 area, I would think. The stock market right now is looking at some big losses this week, and that's all about the tariffs. We made it through the first wave of tariffs. They announced $50 billion. Then yesterday afternoon, they announced another $100 billion worth of tariffs. So a very significant amount. Now, China usually doesn't announce anything until the weekends. So we expect to hear some kind of retaliation this weekend, and that's why nobody really wanted to go home with a long stock position. A lot of people bailing out of those. Crude oil. Now, the reason I mentioned crude oil is two things. First of all, it broke an upward trend line today. Plus, it could be part of this trade war with China. You're looking at China takes a substantial amount of crude from us. We're exporting it to China because of all the production coming out of the shale. Now, if they decide not to buy our crude, all of a sudden we've got an excess supply, and you're looking at that $35 crude again. So that's something really to watch at our next EIA or down the road, see if we're continuing to export large sums and mostly to China. Big news coming up next week is going to be your supply and demand report. It's probably going to be pretty neutral for over in the wheat market. As far as corn, they're looking at ending stocks going up about 70 million bushels. Beans, they're looking at them going up about 20 million bushels. It'll be interesting to see how the supply and demand report comes out after knowing from those quarterly stocks report on at the end of the quarter that we've got more stocks out there. Those two groups don't talk very much, so it's one of those things where we might have had a bigger crop last year and they have to somehow account for that without increasing the crop. So it'll be interesting to see how that comes out. I think after that report comes out, if it's somewhat neutral, once again, weather market for the wheat, and then you're going to be looking at what kind of planting conditions we're going to have on the corn. I do think also with that planting conditions on the corn, with what we're seeing with these tariffs and everything, and if they do come enacted, you're probably buying some more corn acres out there. So before I was very reluctant to be selling corn. Now, if you get up to the certain levels that are profitable, you might want to take a harder look at it. Remember that 440 level never holds as long as we have a carryout of a 1.7. So if for some reason we see a rally up over that 440 level, great opportunity to get some hedges on. So the news Tuesday, supply and demand report at 11 o'clock. After that, we're looking at weather issues, planting delays, that whole gambit. And by that time, too, we should know what kind of retaliation China has planned for us. So a lot of stuff out there, that political risk, you never know when that's going to hit you. Whereas with the weather risks, we're getting a little bit better handle on that. So that is your weekly update from BIS Commodities. If you want to get a hold of us, give us a call, 1-800-373-2525. Or look us up on the web at www.biscommodities.com.